The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the August 19th, magnificent Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential. Because living up to our potential is something we must master each and every day. So let's begin with a few empowering beliefs. Firstly, life is constantly testing us. That's you, that's me. It's constantly testing us for our level of commitment. And life's greatest rewards are reserved for those who demonstrate a never-ending commitment to act until they achieve. This level of resolve can move mountains, but it must be constant. And folks, it must be consistent. As simplistic as this may sound, it is still the common denominator separating those who live their dreams from those who live in regret. You know, it's your decisions, not your conditions, that determine your destiny. Focus on where you want to go, not on what you want, not on what you fear out there. The question for each of us is not what we would do if we had the means, the time, the influence, and the educational advantages. The question is, what will we do with the things that we have? Why? Because you have an amazing power within yourself. And you know how it goes. That power is so strong, folks, you can't do anything. You can move mountains out here. Let's go check out the mountains in the markets. Right now, you've got the Dow up 16 points, trade out at 15,098. S&P up 2.5 at 1658. Composite up 19. That's the leader in the clubhouse. That's up 0.5%. Trade out at 36.21. That is being led by Google up $13 right now. Apple up 7. Microsoft up 11 ticks. Intel up 71 pennies. Cisco up 34. We're going to have to check in on all of those stocks, see what they're doing. Leader in the clubhouse, the 3D company Stratasys, SSYS. That's up $4 and change. Well, how can that be the leader? That must be something wrong on my system because I'm showing that Google. There we go. Google is the leader. They're up $13. Apple up 7. Then Stratasys right behind them. LinkedIn up $4.50. SoFun Holdings, SFUN. That sounds like a lot of fun. They're up 9% here this morning. That's up $3 and change. Tesla Motors up $3. X1, one of the other 3D companies, that's up about 4.5%. Zillow looks like they are the leader to the downside, down $4. Cobalt International off $4. GTX Inc. off $2.66. Our call number is 877-927-6648. If you give us a call, we can go check in on your stock. So now let's go check out the markets by looking at let's go check out and see what's going on the 30-day chart. Let's look at the EKG of the S&P 500. Now, price had bounced up into the level of 1657. Many of you may have said, well, Steve-O, why did it get to 1657 and move into a holding pattern? You know, that's a fabulous question out there. And we're going to go take a look at what old Mr. Leonardo Fibonacci has to say about that 1657 number and why it just simply has become a resting point at this spot. If you're watching us on Tiger TV, you're taking a look at my chart out here, which measures expansions and contractions of swing points. If you are listening on the radio or your mobile device at tfnn.mobi, thank you so much for doing that. Remember, you can catch the archive of this show on Channel 9 or the live stream if you'd like by going to the homepage of TFNN.com. On the right-hand side, click on that button that's got that 3 smartphones out there. The show will stream live. And if you prefer the HD version of this show, just go join the Tiger's Den. All of our charts are in HD. Now, what we're looking at here is a 1.272 expansion of a swing point from 3 o'clock in the morning. That was at a price level of 1655 all the way down to the swing point low at 8:30 this morning out at 1649.25. If you took the difference of those two, Multiply that difference times 1.272, added it to the low at 8:30 this morning, out at 1648.50. That'll take you up to 1657. If you go from that same low, basically from the high swing point at 11:30 on August the 16th, out at 1661.50, down to that same low at 8:30 this morning, the 0.618 retracement, 1657. That's why we've seen price just hold that area out here. Now, for those of you that are intraday traders, if price can hold the 1653 level, that would be a reason to take a very short-term trade, because you could see a bounce. Obviously, if we take a look at what's going on inside the action of Google, Apple out here, you're seeing a significant bounce there with the NASDAQ composite up 19, the NASDAQ 100 up 24 points right now. They're the leader in the clubhouse. If I take a look at the New York Stock Exchange, that's showing that is actually the leader to the downside here, but only up 0.2%, 750 net declining issues. We are going to see bounces here in a market that on the shorter term, and I'm talking, when I say shorter term, I'm talking the daily charts out here that clearly show that there is a retracement, a correction, a pullback. We won't use the word correction necessarily, because that in itself has not proven to be the that's not proven itself until we start taking a look at destruction, in my opinion, on the weekly and the monthly charts. Now, that's why price stopped at this area right here. So would you jump in on a long? No, you'd like to actually see it pull back and see what that pullback looks like before any kind of, because right now the trend and the trade you should be looking for are to the short side. Your expectation is to look for some bounces that you could sell out here. And I don't think you pay attention to the 30-minute chart for that, but the 30-minute chart is going to help you to understand what's going on in the markets and to understand the non-random patterns that are out here. Why price moves, and when you get a conjunction of a expansion and a contraction of Fibonacci swing points, why prices stop there, at least pause there, I don't know. I just know that it works, and it's something that you can do on your own charting software package, even if you don't have this tool, because you can always measure contractions and retracements. They're leading indicators to help you understand why price is doing what it is doing out there. So that is on the 30-minute chart for the ES Mini. Let's go take a look at the actual daily index out here. We'll start off by taking a look at the S&P 500. Let me see if this, let's start off by taking a look at the VIX. So to give you a better idea, both short-term and intermediate term here, right now you've got the VIX at 1449. What's the key here? It's above the 50-day exponential moving average, which right now measures out at 1402. On Friday, we saw a push lower into that. That rejected it. It stayed above the 50-day exponential moving average so long as price stays above that, folks. That is what is telling us. That's where the most damage in any kind of market correction gets done inside a marketplace out there. So you want to keep an eye on that. If we go back now and take a look at the S&P 500, let's go see what it is doing out here. Let's go put up the daily chart. Give me a moment to do that. Take a look at the S&P 500. What the S&P 500 has now done, it's made the 0.382 retracement. That is the first natural move of any retracement. In this case here, we're going from the June 24th low, that price 1560.33, all the way up to the high that was put in here on August the 2nd. That was at 1709.67. When a market begins to retrace and pull back, the very first level of that elevator that it's going to move down to is where? The 0.382 retracement level. Because of Leonardo. Well, if we take a look at that number, that's 1652.62. Right now you're trading at 1657. What did it get down to this morning? It got down to 1651.63. So it's made that first level. People are going to be let off of the elevator right here because people get off on different floors. What's the floor that the S&P is likely going to move down to? That would be none other than the 0.618 retracement. What we can see that's taken place here in the S&P 500 are a number of things. Number one, if we take a look at the trend line coming off of November 16th, that's your first touch point low down at 1362. Your next touch point low is going to be December 31st. We're back below that trend line. That is at least short-term bearish out here. So you're back below the trend line. If you take a look at those two squiggly lines on my screen, the blue and the red line, the blue and the red one, those are the 9 and the 18-day exponential moving averages. We had a crossover, meaning a cross through. What do we say? Crossovers to the downside, cross through to the upside? Well, we're just going to say we'll call it a cross through. We had the 9-day cross through to the downside. How about just explain it like that? That is from a lagging indicator, also bearish. That it gives you an indication of when it is that you want to be in bearish position. Now, again, we're looking at a daily chart out here, and so you got to keep your mind on the time frame. If we take a look at where price moved down to at the 1650 level, that also happens to be a primary trading range boundary line. So price has moved back and it's tested. So it's got some decent support here. So if we were to see a bounce, it should not be it should be expected, just simply because of support areas, the 0.382, because of coming down into a primary trading range. Now, that's not having me change my short position in the marketplace other than just tightening the stops, let the market do what it's going to do. I'm not taking a look at taking a long play here. Now, if we were to see conviction come in the market, by conviction, wide price spread, accelerated volume, that would say a lot. That would say a lot, and what we would be measuring it against, we'd be benchmarking it against the August 15th level, because then with only a 0.382 retracement, that could be setting up a large A to B equals CD. So we know what to look for. I'm not saying that's what's going to take place, but we do know what to look for, and it is important to monitor that 0.382 retracement level. What could really be happening here? Well, what we could be seeing is the B to a C of an A to B equals CD down that might form on any kind of bounce here. Where would that take us to? Well, if we just simply go from that August 2nd swing point high, then we'll use the low so far that's taken place today. Your 0.382 retracement takes you to 1673. If all the market does over the course of the next couple days is makes it to 1673, it's at 1657 right now, and then begins, and it's on a light bounce up, light volume on the way up, and then it begins to move down. Well, if we go take a look at what that A to B equals CD would look like, that would be a very powerful A to B equals CD to the downside. That would take us for sure to the 1 to 1.272 or the 1 to 1.618, which I suspect is what it would do. That would take us all the way back into the June 24th low out there. So that's one possible expectation. Another is just simply bouncing up to the 1687 level. At 1687, that is your normal 0.618 retracement. If we take a look at if that were to occur here over the next couple of days or whatever the time frame is, that sets up your 1 to 1 A to B equals CD and your 1 to 1.272 in the 1612 region. At 1612, you would actually have a Gartley buy pattern if that were to occur. You'd have to be monitoring volume most certainly, but right now what we know is here's what the S&P has done. It's made its first normal move down, which is to the 0.382 retracement level. It's also run into some support at that primary trading range boundary line of 1650, and we'll see if it can find any legs here. It is not on the daily chart. It is not oversold. It is not overbought, so it has room to run in any direction. The VIX index being above the 50-day, the McClellan oscillator being as negative as, the bears have now had control of the market for nearly 3 weeks out here. 2 of those weeks was a consolidation move sideways, and then we saw the big thump down out here. So the bears are the ones that have control of the ball. That means what you should be looking for are bounces to sell, not opportunities like this out here to buy in the marketplace. That is on the S&P 500. If we go take a look at the ETF and we take a look at the SPY out here, what we'll see in the SPY is basically the same thing. Now in the SPY, the 0.382 retracement, the SPYs have not gotten down to it just yet. 165.15. So far the low has been 165.40. Close enough for me in my work out here. What the SPYs are also doing, they are testing the sign of strength, a little mini sign of strength, 135 million shares on July 11th to the upside. The pullback here on Friday was 130 million shares, so it's testing that area on lighter volume. Came in there with big volume on the 15th, 152, but the test of that area still on lighter volume. So we're seeing in the SPYs here an area of support as well. 877-927-6648. We'll be right back, folks.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Market is flat with the exception of the composite NASDAQ Composite NDX 100. And first I'm going to take a look at the Cliffs Natural Resources for Mike K. in our Tiger's Den out here. He's looking for a entry point. And then we're going to go take a look at the NDX and the composite, just simply to get a feel for what the market is doing, where it is headed to. So we're taking a look at, again, Cliffs Natural Resources. The ticker symbol on this is CLF. Now, the first chart that I've got up on my screen here is the monthly chart. We can see how this thing has just been hammered down all the way to its lows. The lows out here that we're talking about are the lows back from March of 2009. So this equity here, if you want to take a look at a performer with regard to the market, it's already back in March of 2009. This thing had made a nice run from the March 2009 level of $11.80, made a high out here coming into March of 2011. So it took a couple of years, got up to $102. So not a bad move considering it came from $11.80 to $100. So that was a nice, tenfold move out there. But then what you saw on the monthly chart. We're looking at the monthly chart first out. This thing just simply fall off of the plan. Of course, there were signals out here when it was making a high that was running into trouble. What were those signals? Number one, you had this little high wave candle out here. This is this little, looks like a doji type candle, and they're both very similar. Nice long upper, lower shadow on this. It tells you that the bulls would seem like the bulls are in control here, but this small body, you see the body is really the essence of price out there, and this was really telling us that it was losing direction. It was losing steam out here. Now, it was up over a support area because of this little dark cloud cover here from April the 30th, 2010. So it should have been able to find good support at about $76 on the pullback. What we saw out here was we saw a bearish engulfing candle that formed on April the 30th. We saw another bearish engulfing candle that formed out here on July 31st. That was telling you, boy, the bears were really starting to get their foothold in. This thing had really started its downdraft going back in September of 2008, and just simply that was just too much for price to handle. And now it's moved all the way back down into March of 2009. So Mike's looking for a possibility of a replay of this. Can this thing, just, I assume, make a retracement or get back up to its highs back here in April of 2011. Now, I don't even know anything about the company. Don't need to. All we're going to do is pay attention to the stock chart and look for a potential buy. Now, what we don't see out here is we don't see any kind of real sign of strength. We still see, you see some big volume on the trading session of April 30th, but not wide price spread out there. So what does that mean? And that's a really good question out there. Well, what it could mean is if you look at the low of $16.74 out here, and so far that $16.74, we've seen it close below. We saw $16.25 on June 30th out here. That $16.74 to $15.50 should be good support. So, Mike, any trade that you would get into, you would need to look at support being down there, at least on the monthly chart. Now, let's switch over and take a look at the weekly chart on this. See if we can see anything here on the weekly chart. And right now, we're just trying to understand where is support on this equity. Are there any bullish candles? Are there any volume bars? So you got a bullish candle right here on the weekly chart of April 26th. That's a bullish engulfing candle. Moves slightly higher, so that's still pretty good out here. That says that low of 1674. So it shows up again as a possible support area. You had a little bull sash candle. It's very similar to a bullish engulfing candle. That's on July 12th. So it really says, boy, 1541 is really critical out here inside Cliffs Natural Resources. Now on the daily chart, we'll try to finish this up in 1 minute's time. What it's doing, it's pulling back. It made a high out here on the daily chart. That high came in on the trading session of August the 12th out there. And now it's been pulling back, and it's pulling back into what was a little gap out here that was created on August the 8th. So it's testing a first area of support. The volume on that candle is coming back to your benchmarking 19 million. Friday was 9 million, so it's coming back in that area pretty nicely. And today, 3.4 million. It's possible that this area here, which is the dead cat bounce, the 0.382 retracement level, it's possible that this could hold. What you'd like to see is this little window here, which is the high of the trading session of August 8, 2217. You'd like to see it close above that 2 or 3 times. You'd like to actually see it be tested 3 times. Today's going to be your first time. And you'd like to see it coming back in there on less than 10 million shares. If it's coming back and volume starts to pick up, you pretty much have to wait until you get to this high volume bar here on July 26th. And that's your better trade out there at the moment, which is the price pulling back into maybe the 1838 to 2005. The other thing, if it pulls back into the 1838 level, that gives you the wide swath out there to be able to put in a wider stop and just simply have fewer shares inside this equity. So that's on Cliffs Natural Resources. If you're bottom fishing, that's one of the ways to go ahead and take a look at it. And that was for Mike K. in our Tiger's Den. 877-927-6648. When we get back, we're going to go take a look at the NASDAQ 100. Try to get a feel for where it is headed to. Be right back, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Boy, under the covers, it does not look good. New York Stock Exchange off 26 points right now. 903 net declining issues. That's a little bit different story than the NDX 100. As we take a look at the weighted structure inside the NDX 100, Apple being up, Google being up. Right now, the NDX is up 0.7%, up 22 points. These markets, though, they will not croak without the NDX participating. So that's why it's important for us to take a look at the NDX 100. We're going to do that right now. We're going to start off by taking a look at the daily chart. Now, on the daily chart here, what the NDX did was the NDX formed a 1-to-1 A to B equals CD. That price point projection was 31.48 and change out here. It actually got to 31.49 on August the 13th before it formed a bearish engulfing candle on the very next session. Now, you had this little You had this little bearish separating line candle. That's this one right here on August the 6th. What's the importance of those two bearish candles? Well, we know where the bears are hanging out inside of the NDX 100, and they are protecting that 3148 level. If we see a close above 3148, then that tells us that the bears have lost control at least of the NDX 100. Price will have broken up above a resistance level, and price will move to the next level. What's that next level? That is an excellent question. It's 3234. That would be your 1 to 1.272, A to B equals CD. What else do we know about the NDX 100 on the daily chart? What we know is that coming off of the trend line from November 16th's low, 2494, down to the trend line low out here on April the 18th at 2730, that trend line held, and that trend line is where the June 24th low ran into. So that's an important trend line. Nowhere near that trend line at this moment. In fact, right now, what the NDX has not even tested, which it should test, is going to be the top of that May 22nd level. May 22nd, that was our key reversal session. That was a bearish engulfing candle. That set up resistance at 3053.51. Once price broke above that level, that said, price could move up to the next area. What was that? That was the 1 to 1 A to B equals CD up. It broke above it really on July the 11th. Was a gap up. That was important because if you only looked at that candle without the gap and filling it in, you might have missed out on the importance of that wide price spread out here that was inside the NDX as it was taking on that B point, albeit on light volume. We know that as the highs were being made out here in the index, it was moving into what? Overbought territory. When you move into an overbought territory, you've got to work that condition off. How are you going to do it? By moving sideways or pulling back. Now, what is important is today's candle. If this were to finish the session here today, what this would create at the bottom a support area based on a morning star reversal. So 3-candle pattern out here. This would be a bullish candle pattern. Of course, that bullish candle pattern is running right into a big old bear leg. That bear leg, you had that bearish engulfing candle right here on April the 4th, and then a gap down on April the 15th out here. So even though you'd have a reversal signal, all this would be telling us is you've got a big battle that is going on inside the NDX 100 between the areas of 3149. Wait a minute, make sure I get that right. Yeah, 3149 and the lows of Thursday out there at 3068. So we'll know where the bears are. We'll know where the bulls are in this case here. And we also know that because price broke above that May 22nd area, that still now is bullish inside the NDX 100 until price breaks back below that. If that gets tested and that holds, that would be bullish out here. And so in the NDX 100, we have not seen a breakdown. So that's on the daily chart for the NDX. Let's go peek in on what the weekly chart for the NDX says to us. So we'll take a look at the weekly chart, a little bit longer-term time frame. The NDX here is showing what? The price is inside the rising price channel. It's well above the bottom of that rising price channel. We're taking a look at the 10-week and the 40-week exponential moving averages. Those are in very bullish forms out here. The blue line is the 10-week. The red line is the 40-week. That's the equivalent of the 200-day and the 50-day, just simply brought back to reality based on a 10-week and a 40-week out there to take a look at the so-called death cross out there, or golden cross. In this case here, we are not seeing any kind of bearish candle formation up at these highs. In fact, all that we have seen right now, remember, what I try to teach you is the importance of understanding, especially in this case here, that candle that formed on August 2nd. Nice big up thrust there. And then the prior 2 weeks, all we've seen are small bodies. Even last week's body is what I consider to be a small body. It's still traveling with inside that August 2nd candle out there. So no breakdown. In fact, on the weekly chart, just like we were looking at on the daily chart out here, we're taking a look at where the bearish candlesticks. This candle right here is not bearish. Just because these two are red, they're not bearish. This, in fact, is just a pause button. This bearish Harami candle that's out here from the week of August 9th. If price, in fact, were to get above that 3149 level, that's the high of August the 16th. I don't remember if it wasn't August 16th when it made it, but last week out there, you would actually then have a continuation candle on the weekly chart out here. So that's important to be able to tie the weekly along with the daily chart out there. Now let's go take a look at let's go look at the longer-term chart out here. Let's go take a look at the monthly chart for the NDX 100. Let me get the right button out here. On the monthly chart, now you get to see the old consolidation pattern that has formed inside the NDX 100. This consolidation pattern, unlike in Lightspeed Crew, we're taking a look at a 14-point consolidation pattern. We're looking here at a 1,200-point consolidation pattern inside the NDX 100, going from the level of 2,200 down to the low of about 1,000. So that's our 1,200-point consolidation level that it had been traveling in, taking us all the way back into the 2001 time frame, January 2001. We could actually call it December 31st of 2000 out there, the low, which was at 2174. So you can see it has been consolidating in what seems like forever, 13 years. Well, it actually broke out of that consolidation range back in December of 2010. Came back and tested. Remember, as we were taking a look at the 30-year Treasury out there, having now broken a long-term consolidation a couple year, you come back and you test it. Well, inside the NDX, it came back and tested it, rejected it, came back, closed just slightly inside it on September the 30th. You got to give it just a little bit of room. And then on the monthly chart out here, you get a nice little bullish candle configuration, and it's off to the races inside. That was October of 2011. The consolidation pattern, remember, the top of it is right around the about 2,200. So 2,200, 2,100, maybe 21 to 2,200, plus 1,200 points gets you to what? 33 to 3,400. 3,280. Happens to be the 618 retracement coming off of the high from 2000, March 31st, 2000, at 48.16, all the way down to the low that was put in October of 2002. And what we can see out here on the monthly chart, as I blow this up on the screen, you're going to see, in fact, the only bearish candle out here, or bearish candles, they occurred all the way back here. If we were to take a look at support on the monthly chart, here it would be your tested level of support. What I mean by that is that we had a bearish engulfing candle really right here that took place. Actually, I'd have to move it up. That's probably the proper level right there. You had the bearish engulfing candle that occurred right here in October of 2012. That sets up the resistance line, which is now support at 28.78. And what we have seen is as price moved above that area, which it did here the week of May 31st, or the month, I should say, of May 31st, 2013, in June, at June 24th low, as was coming back and testing, if you can recall that diagonal support line that we were looking at, that trend line. Well, on the monthly chart, what it was doing, it was coming back and it was testing a old resistance level that now becomes what? Yes, it becomes new support out here. So that has been tested. Not only was it tested, this so-called dark cloud cover that formed out here, that was taken out with a bull sash right here. This was in July. And if we take a look at the current action right now in the month of August, does that look bearish to you on the monthly chart? I think not. So in the NDX 100, and it doesn't really matter what's going on underneath the covers. I can tell you with certainty that this is a big breakout, that goes now, takes us back. That breakout occurred back in December, and that breakout has not completed its pattern, which would take you up into about the 3,300 level. Again, 632.80, that's just our benchmark for the 0.618 retracement level is inside the marketplace out here. And on the monthly chart, there's no bears. There is no bears. The only bears out here are bears that are marking support areas because they were prior areas of reversal that was resistance, and now that has become support. So that is on the NDX 100. Now, let's go in and take a look at what's going on inside of Apple and Google and take a look and see what kind of volume is coming in there. We know in the case of Google, that's coming down into what? Into a bullish candle, an important bullish candle, the June 6, 2013 level of 25.79. Out here. Today it's forming inside Google, it's forming a bullish reversal signal out here. GOOG, by the way, is the ticker symbol. If you are going to go ahead and pull this up on your stock chart out here. Volume so far to the upside. This is a bull sash candle out here. Volume is 598,000 shares. That's going into 2 million shares. So in an hour and 15 minutes of trading, volume is not too bad as it's going against this candle session here from from August the 14th when the market started moving down. So it's got some decent volume coming into that area. We take a look at just straight line math, right? You've got about 600,000 shares, so you got about 3 million shares. Now, the volume is not going to keep up at this pace up here, but not too bad considering it's coming against a little downdraft there of 2 million shares. That's inside Google. Now let's go take a look at Apple. We know that's running into a large downdraft area. It's up towards the top of its trading session. It's completing a 1 to 2. A to B equals CD. But volume behind the move is not too shabby. Let me update my volume pattern here. Let's see. There we go. Volume so far today, 6.3 million shares. On Friday, this did 13 million shares. So in an hour of trading, this has got some juice behind it for sure. Now, that is running into this downdraft, this breakdown area here from January 24th. With 52 million shares, but it's up above that, and the candle it's taking on is the breakdown candle at 30 million shares on January 23rd. So if we do straight line math on this, this has got more volume than the 30 million share day from the January 23rd out there. And where it becomes support now inside Apple, probably that 200-day exponential moving average, which right now is at a price level of about 469 on it. So Apple looking pretty good here with the exception of truly being in overbought territory. So don't jump in on this. If the market's going to break out, then take a look at a pullback inside this. But right now, New York Stock Exchange, it's very clear the bears have control of the ball underneath the covers because it's the New York Stock Exchange that is showing us about 750 net declining issues. It's New York Stock Exchange that's the weakest out here, being down 13 points. Russell 2000, an area of strength. That's just only off 82 cents out here. So we'll go take a look at the IWM. Let's switch over and take a look at the ETFs and see what we have going on out here. In the case of the IWM, let's see what it is pulling back into. Give me a moment here to pull it up. So the IWM is coming right back into the gap up, so an area of potential support. That gap up, not really any big volume out here. There was 34 million shares on July 11th. The prior candle, which was 36 million shares on July 10th, that's got the more volume out there, so that's the one to be paying attention to. Now, the top of that is 101.38. What we have seen the IWM get down to today is 101.40. Has not completely tested it. 5.8 million shares, so this is going to be important to watch. On the IWM, the key here is also going to be, because this has been a strong index, is going to be that trend line coming off of the lows back here from November the 16th. That trend line you can also attach to it the low of April 18th. That's where the June 24th low ran into. You can see that there's a little cross-section here of the high. Bearish engulfing key reversal session from May 22nd out at 100.38. And it looks like we got a little intersection that would run into it right around the 22nd, so that would be a couple of days from now. Today's the 19th, right? So 3 more days on Thursday. I'm not saying that's where it's going to happen, but that becomes a pretty key level of support inside of the IWM. If that area gets cracked, both of those get cracked, that'll be sending out an important message to us inside the Russell 2000. But so far at this stage, with the exception of volume, downdraft, big volume, 50 million shares to the downside, no real breakdowns even on the daily chart of the Russell 2000. Now, from a lagging indicator standpoint, we've got that 9-day crossing through the 18-day. Last time we saw that was as the lows were being made back here in June. That crossover took place on June 21st, and then it lasted up until about the time frame, I would say, of July 3rd out there. That's on the IWM. Let's go take a look at the diamonds out here. So see what the diamonds are doing. The diamonds right now, that is obviously the weak link here. So on any kind of bounce, what's going to be important to watch? It's going to be important to watch to see, do the diamonds actually get back inside that trend line? Remember, when you break a trend line, what that price ought to do is it ought to go ahead and try to get back inside that trend. Well, in this case here, that would take us to a bounce of probably around the 152 and change level. Right now it's at 150.68. We take a look at the SPY today. On Friday, made a little doji candle out there. Today, right now, if we're to close like this, it's a bullish engulfing. But it's such a small body that it wouldn't be one that would make me want to say, hey, let's jump on the get off of the short train, which I am short the Dow, and jump onto the long train. Now, what could change my mind there is if we were to take a look at inside the ETFs, the indexes, and see the VIX fall below the 50-day exponential moving average. So let's go check back in on that and see where that stands inside that battle out here. And at this stage here, the VIX is not really giving it up. And the 50-day exponential moving average, that price point is 1402. Right now, it's traveling at 1448. 877-927-6648. Dow's up 18. S&P is up 2. NASDAQ up 20 points. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 15 right now. S&P up 1.5. NASDAQ up 19. No big deal out there. Let's go checking on the currency and marketplace, see what we have going on out here. Let's start off with the Queen. See what the Queen Bee is doing here right now, traveling out at 1.335. And just not willing to give it up, and it wants to go back, and looks like still test the most recent swing point high out here. I say that because of this wide-ranging bar that we had on August the 15th. You can take a look at these small bodies here. They're certainly not giving it up. You get a close above the level of 1.3362 out there. That's a little bit of a continuation. Now, that continuation is only going to run into resistance right here just above it at the 133.99 level, or maybe all the way back here at the 134.15 area. If it can get above that, that would be impressive, and that is on the euro-US dollar currency pair. It is just not simply is not showing any real weakness here at the moment. Let's go take a look at the U.S. dollar Japanese yen. That had a nice little Gartley buy pattern. That Gartley buy pattern says that price should pull back into the 0.618 retracement level. That would take it into about 99.33 or so. Right now it's trading out at 97.98. So I'm not seeing any real reversal signals inside that currency pair. If we take a look here at the Euro-Japanese yen, that cross pair, that's important from our market perspective. Now, this is a currency pair that correlates directionally real well to the S&P 500. This thing here, this is bearish actually, because it formed a Gartley buy pattern, and now it's completed the normal 0.618 retracement, and our market has not done anything. The stock market, I should say, has not done anything to the upside. Now, the bar coming into that 0.618 area, somewhat a wide-ranging bar, because it's going all the way from the 0.382 retracement to the 0.618. So this says that price could move a bit higher out here. Now, it doesn't have to do it during the normal trading hours, a 6.5-hour trading zone out here. It can most certainly do that overnight. So if you were to come in the morning and futures would be up, you want to be paying attention to the completion of this pattern here, which would be in the 0.786 here. Now, it's completed already, this level here, but because that wide-ranging bar, it says to me, maybe this thing really wants to head to the 131.70 area. If we go take a look at the intraday chart on this currency pair, let me see if I can pull that up. Here we go. On the intraday chart now, and the reason why it's very possible that the 0.618 move could be it is because we have seen the 0.786 retracement on the 30-minute chart inside the Euro-Japanese yen. But even the bit of caution there is this wide-ranging bar that took place at 6 o'clock, between 6 and 6:30 this morning out here, and price here is still really trading with inside the upper portion, the upper boundary of that range. So that's on the Euro-Japanese yen, and that's important to be paying attention to. To summarize today, number one, the bears have full control of this marketplace. In order for the bulls to take control, it's impossible. There's not enough shares, there's not enough issues traded on the NYSE to get net advancing issues of 4,260 issues. So that's not going to happen today at all. Number two, you've got the VIX index trading above the 50-day exponential moving average. That is also bearish. We've seen some volume to the downside. It was light volume to the upside. And so, therefore, you should be looking for bounces to sell. A wild card out there that we have to pay attention to, no question, is the NDX 100. We took a look at the monthly, the weekly, and the daily, and it does not have conviction really to the downside out there at all. So that's something that we got to pay attention to. A lot of time left in the trading session. Stay tuned, folks. Some great shows following, and I'll look forward to seeing you on Monday morning. And I want you to remember just this one thing. And that's this. You have an amazing power within yourself. And that power is so strong, it'll create a life of abundance. It'll cure incurable diseases. It will build billion-dollar businesses, paint magnificent masterpieces. But most of all, folks, it'll create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great Monday. Look forward to seeing you tomorrow morning. Take care, folks.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share. Over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.